Welcome to Commercial Real Estate Pro Network's CREPN Radio. Thanks for joining us. My name is J. Darren Gross. This is the podcast focused on commercial real estate investment and risk management strategies. Weekly, we have conversations with commercial real estate investors and professionals who provide their experience and insight to help you grow your real estate portfolio. Today, my guest is Meg Epstein. She's the founder of CA South. Originally born in California, she calls Nashville, Tennessee home now. She's a real estate developer and has over a decade of experience creating efficient, modern lifestyles for people where it matters most, their homes and their neighborhoods. And in just a minute, we're going to speak with Meg about opportunity zones and commercial real estate in Nashville, Tennessee. But first, a quick reminder. If you like our show, CREPN Radio, there are a couple of things you can do. You can subscribe, you can like and share. And as always, we would love to hear from you. Please consider leaving a comment. Also, if you'd like to see how attractive our guests are, be sure to check out our YouTube channel. And you can find us on YouTube at Commercial Real Estate Pro Network. And while you're there, if you would, please subscribe. With that, I want to welcome my guest, Meg. Welcome to CREPN Radio.
Thank you very much for having me.
Well, I'm so looking forward to our conversation today about all things you're doing down there in Nashville. But before we get started, if you could take just a minute and share with the listeners a little bit about your background.
Sure. I moved to Nashville from California, as you mentioned, about 5 years ago. And I thought my background was in residential construction, actually, in Los Angeles. And when I moved here, I saw, a big gap in the commercial real estate space. There was a lot of development happening, but it was mainly from in hospitality and larger apartment buildings. So I started I started a condo platform essentially, and started with my first condo building back in 2016, and basically just scaled up from there and continued a similar strategy of being data driven, and we do industrial flex office now, larger multifamily and opportunity zones, as well as more opportunistic office and residential projects.
Gotcha. And so you came from California and you were primarily building in California, is that right?
Yeah, when I graduated in 2008, so there wasn't a lot of, I always wanted to be a real estate developer, but there wasn't any jobs then. So I went into general contracting essentially, and built very high-end homes in Los Angeles for a general contractor. So I learned building, and, I was on job sites for a long time, and got into development when the market started to turn around.
Gotcha. So, if I understand right, you're from California originally?
Mm-hmm.
So what, if you're from there, and if you're not from there, I know growing up in Kansas, that's all we thought about was, California.
Beach Boys.
Yeah. What was the impetus or what made you look elsewhere?
I actually met my husband, and he was living here. So he was from San Francisco originally, but just like a lot of people in Nashville that come to visit and decide they want to move. And, he said he'd give it 6 months in 2012, and here we are. But I'm very happy for it, because having lived in basically between San Francisco and Los Angeles and New York my whole life, I was pleasantly surprised getting here, and I don't think we'll ever leave now. So I'm very bullish on the Nashville market and the Southeast in general.
Well, and let's talk a little bit about some of the attributes that make it attractive down there. Can you speak a little to that?
Sure. I mean, I think now, given COVID, even having more space and not being in such a dense environment is nice, of course, but just that economically, I think it's still going to Nashville will still come out ahead, because I've seen even more people moving here since then. So from a real estate perspective, there's just a lot of opportunity. It's still a relatively unsophisticated market. So, coming in with outside capital or being, like I said, more data driven, I think has allowed me to scale up very quickly, having started, basically at zero when I moved here. And, but other than that, just on a personal level, I hear people complain about traffic at 5 o'clock, the 20 minutes of traffic, and, coming from LA, it's sort of laughable, and people are very friendly, and, there's proper seasons, and it's accessible to so many things because you're still, you're an hour and a half from New York, Boston, Miami, Austin, Chicago. So it's a very nice, just overall, I think, place to live. And then I think that's why Nashville's seen such a surgence is you have strong academia, you have a lot of entertainment, and obviously the healthcare industry is one of the big factors.
Gotcha. Yeah, and you just barely touched on entertainment. I guess historically, I've always thought of Nashville as being the country music. Is it still the capital? I don't know if that's the case, but isn't the Grand Ole Opry down there? Is that the?
Oh yeah, I mean,
right
music's definitely.
Yeah,
it's definitely music city. That's a big part of the personality. You can listen to live music a lot. I mean, not as much now, but last summer there were concerts in the park every weekend and that type of thing. So it definitely adds to the cultural, richness of the city for sure.
all right. You mentioned the opportunities in real estate and that the market wasn't necessarily as sophisticated. Are you seeing, well, I guess there's a couple things. One, you mentioned demand. It sounds like a lot of people are being attracted to the area. Do you have any sense, and also you mentioned about data, is there any numbers you can point to just as far as the growth rate or the number of people migrating inward?
Yeah, I mean, it fluctuates from what I hear, but I think it hovers around 100 on average a day, 100 people moving here. And then you have some big relocations like AllianceBernstein's headquarters. So there's a lot of high paying jobs. I think there are 3,000 jobs or something to that extent, moving into downtown, right? And then Amazon, of course, is estimated at 7,000 jobs, moving to Nashville. And then Accenture, I think, moved a headquarters here at about 100 or 1,000 jobs. So the data tends to fluctuate, but I think it stays pretty consistent around 100 people a day moving. And I think with these larger companies moving, I mean, there's rumors of Oracle and, Facebook and things like that. But as these bigger companies come, I think the average salaries are pushing up the demand for real estate.
No, that's always helpful if you have large employers that are wanting to locate in your area and have their employees locate there. As far as the current, or I guess prior, I guess you've been there since 15, did you say? 16?
Yeah, I was still moving from California. I sort of transitioned, but 2016 more permanently.
Okay. And pretty steady growth since then?
Mm-hmm. Yeah. And it's been
Okay.
a lot of growth, a lot of construction.
All right. And as far as like the cost of real estate, can you make any comparisons, like a project you would have worked on in LA as opposed to Nashville, just on a side-by-side comparison from cost and then also the eventual sale price or rents, or can you provide any comparison?
It's tough because I was only really working in residential in Los Angeles, so very high-end residential. So I can't really speak too much to that. I mean, definitely the cost of land since I've started developing here has increased, significantly. And I think even before I started, was seemed to have doubled or tripled in a lot of cases, especially in the downtown area. But I can't really compare it. I know building costs are more affordable here. And obviously the cost of living is, a third of, or 2/3 or so of what it would be in California. So.
No, and I would think that unless wages are substantially less, that there would be more disposable income from people to, enjoy all the area has to offer. Um, let's talk about some of the projects you have done in the last few years here. Can you describe, I guess, the first project? Let's talk about that.
The first project I did was a 77-unit condo building. So I chose condos because I was looking for a condo when I first came with my husband, and a lot of the inventory was, 10 years old, and there really just wasn't enough condo buildings being built after 2008. The financing options really, were less available. So apartments and, family and the institutional markets just tend to focus only on apartments. So I focused on condos, and I wanted to do sort of a boutique size project. So it was 77 units, and it was almost adjacent to downtown, but kind of in a residential feeling neighborhood, like a urban walkable neighborhood. And we actually ended up converting it, or allowing with the HOA, and I learned a lot through this experience, but allowing it to be owners to Airbnb out their units. So we see a lot of people that split their time in Nashville, or they want to invest in Nashville, and Airbnb is very popular here because the hospitality market is undersupplied. I don't think it's going to be now, but with all the construction and obviously the pandemic, but we saw a lot of people and investors wanting to Airbnb, so we allowed for that into our documents. So they sold very quickly. It was 80% sold by the time we finished, for higher than we pro forma'd, and I think we only have one unit left now. So that was a great, successful project. I think our sellout was around 36 million or so, and IRRs were over almost 80% or something crazy. But so it was a good, strong first project. I think it was a bit of an anomaly, but that was the first one I did.
No, I'm sure that success on a project like that helps you with future projects, and that'd be investors or lenders or contractors, et cetera. And you said 80% by the time you were done with the construction. Is that right?
Mm-hmm. Yeah.
Oh, that's fantastic.
It was crazy. I think, there just, again, wasn't a supply of condo buildings that you could Airbnb in. And it really adds a lot of flexibility for people, especially if they're splitting their time, or, a lot of people, there's no state income taxes here. So a lot of people do split their time, especially in the entertainment industry. Maybe they go back and forth between LA, where you can Airbnb out your condo while you're gone, and let it sort of pay for itself. And we had to set up a whole management company on that, to manage, give people the option to use a management company to account for bookings and cleanings and things like that. But that was a whole, it was an odyssey figuring that all out. But once we did, it was great. And we have a great team and partners. So
you mentioned its location being close to downtown. Can you speak to the area? I mean, is there a transformation going on, or are there pockets that are, there's the reinvestments going on? Is it? I guess I'm looking also at the opportunity zone kind of a question. Are there areas there that you've identified that you can, I guess, create a neighborhood feel, or there's appeal for the location?
Sure. And I'm interested to see how this will change in COVID, if it will, but I haven't noticed a huge significant shift yet. But if people there's going to be a resurgence of the suburbs or something. But what I was seeing, if you look at the opportunity zone map of Nashville, I mean, it's really favorable for our city. I mean, I know some cities like Austin, and it's much farther outside the city, but ours is, pretty much a mile of where the Amazon downtown campus is. It's just about a mile circumference around that is all opportunity zone. So actually, the first project I mentioned, even though I did it as condos, while I was building it, the opportunity zone legislation came out, and we looked at possibly selling it because it was already under construction, but not far enough along where it would prevent someone. But it was pretty new at that time, the whole opportunity zone legislation. So there's some neighborhoods, where Nashville had grown so fast where it's in an opportunity zone, but there's $1 million homes in the neighborhood. So it's obviously favorable to a real estate investor. I don't know if it accomplishes the intent of the legislation, but in the neighborhood I first focused on, the Edge Hill neighborhood, which is the one I mentioned adjacent to downtown, I'll be starting my fourth project here, and that's all in opportunity zone. So the later ones, we've taken advantage of the legislation. But to answer your question, I think that in Nashville, and I'm sure this is the case in other cities, is that people don't, younger people or people in general don't want to be out in the suburbs in an isolated house, but want to be, in the urban core. And we've seen the revitalization of urbanism and people wanting to be in downtown. But I think the walkable neighborhoods that are accessible, where you still have some space and maybe you're not in a downtown high rise, are very desirable in Nashville. And those neighborhoods have appreciated, significantly in the last 10 years. Old neighborhoods like East Nashville, Shermantown, 12 South, for example, these areas were not nice at all and crime ridden, and people start flipping houses and becomes a lot more desirable. And I tend to put my buildings in those type of neighborhoods that are walkable and kind of are connecting a gap between the suburbs and high-rise downtown living.
And you mentioned kind of the turn of the neighborhood. Are there is there a character of the older buildings that is being maintained in a lot of those situations, or is it pretty much, are they tearing down and building new, or?
No, I think as much as people can. I mean, we don't have a strong historical overlay program here, but what kind of defines some of the architecture in Nashville is these old warehouses, and a lot of people like that kind of loft feeling or old brick. It's very conducive to Nashville's, the music industry and the industrial aspect of it, and the train tracks and things. So people do, I know several big, larger projects now where people keep, try to keep the bones of something and either build on top of it or incorporate it somehow. I do, for sure, especially if it's a cool old brick building or something like that. But a lot of times, I'm thinking of the projects I have, are pretty dilapidated old retail or warehouses and things like that. And you just demo it.
Right. Yeah, no, you need some pretty good bones on some of that stuff to make it worthwhile. What you mentioned that your projects aren't high rises. Are they like garden style, or how many stories are you building in some of your projects?
It's turned out, I'm not opposed to doing a high rise eventually, but would have been, the most successful model for me has been, a floor or two of podium parking above ground, because Nashville's all rock, and then 4 to 5.5 stories of framing, stick framing. So it's not garden style, but it is a more economical type of construction than high rise. But I think, I also won't build something that looks like everything else. And I tend to bring, my architectural partner on the first project I mentioned came from San Diego, and you check out the website. It just looks a lot different than anything here in Nashville. Kind of is that, bringing the California to the South type aesthetic. So I've done that several times and tend to work with architects from California, or at least have them be a design architect, and get a more unique, modern, architecture style that appeals to people moving here from bigger cities.
I love it. You got a kind of your own look. Can people identify your properties from? That's a CA South property. Is that?
Yeah, I think so. I think we're getting there, especially as we complete more. But there's definitely a place for. I just think that the monolithic institutional apartment is probably profitable and works. Obviously, they wouldn't keep building them by the thousands of units, but it's just, I don't think a whole city of that, is going to really shape the built environment in a way that I think is important. I don't want to just do something just because it makes performance out.
Got it. Now, you mentioned your current projects are in the opportunity zone. Is that right?
Some of them. Yeah, okay. I have 6 projects in opportunity zones, and always counting, always adding more. But we will probably structure 3 of those as opportunity zone funds, or 4 of them as opportunity zone funds. So sometimes, it just depends on what capital is available. It doesn't, as the development sponsor, it's nice to diversify and not get away from a merchant build model and hold assets for 10 years like we typically do. But it just depends on the type of project. When, if it's $100 million, it's probably a lot easier to get opportunity zone institutional capital that doesn't have a lot of places to put it right now than, a $30 million project. So.
Right. And in the different types of projects you've got going right now, what do you have? Industrial
flex office and larger tilt-up industrial is one. Condo projects, mixed-use opportunity zone projects, and office.
All right. And I guess where am I going with this? Determining what to build, or what are you sifting through? How are you determining what to build? Is there just a broad recognition of need, or how are you?
Yeah, mainly vacancy. I look at the vacancy of certain asset classes. I'm also pretty dialed into the community here, which is why I decided to focus on Nashville, at least until we get to over $1 billion under management, because I think it's, one of the best markets in the country. So it's hard to leave when you have the sort of boots on the ground intel and relationships, right? So I've focused on different asset classes, and how we chose those were just based on, pretty unbiased, just able to look at data as opposed to being focused on one asset class and only doing that one thing for decades or something. So we tend to be very opportunistic, but in industrial, for example, I think, my husband had a company, he does private equity, but he had an office where he was renting an industrial flex space, and his rent doubled over the course of a couple years in 2013 to 2016. And we're going, what's going on? And started looking at the vacancy, looking at these old buildings that are 30, 40 years old are doubling their rents, and there's no vacancy, literally none. And so I started just looking at the market and talking to the brokers, and that's kind of where we formed that strategy. And the same thing with condos, and the same thing with opportunity zones. So it's just basically market data. Our office project is a condo project, same thing. I looked at the market, saw a lot of the older inventory that's 10 plus years old trading for what I could sell a Class A brand new building for, and not seeing anything in the pipeline.
Gotcha. Now, the condo type projects, you build and you sell the units. Do you retain any ownership of any of those projects?
Sometimes on one, the one I mentioned, I'll keep a unit for myself and rent it out. It's better for taxes that way because condo income is ordinary income. But I'll hold that as an investment property for a few years. I office out of one of the projects where there was enough equity for me to just keep the office and not pay rent, things like that. So I try to, it just depends on how the sales go and what's available, but I try to hold on to, some assets.
Gotcha. And are you doing any projects that are more of a long-term hold in these opportunity zones? Is that?
All the opportunity zone projects we hold for 10 years, the ones that are set up as opportunity zone funds. So I have one project, it's a smaller mixed use project, but it's in an area that's gentrifying that we're very excited about, and that'll be a 10-year hold, as well as two others in the first neighborhood I mentioned. So yeah, we always hold the opportunity zone projects 10 years.
Gotcha. Attracting capital right now, you've mentioned it a couple times. Is it, are people saying, what do you build next? Or is there plenty of capital for you to go? Or has it been or have there been any challenges raising capital?
I think there's still a lot of money on the sidelines. And as I said, Nashville's sort of a darling market, especially it's obviously been a lot more popular in the last couple of years, but with COVID, I think a lot of people, and Amazon's presence here, and I think a lot of people have felt comfortable continuing to place dollars here. And so I haven't had a problem or, raising capital. I've raised, I don't know, maybe 50 or 60 million since March. But it has to be, I also focus on the asset classes that are sort of coming out of the pandemic shining, which are, not luxury apartments. So more middle market apartments as well as industrial.
Now, did the hospitality and the retail there?
Right. No.
Yeah, right.
There's a little bit of retail in some of the projects, but just, more like forward facing, just as part of the mixed use aspect.
Right. No, I think that mixed use asset class is pretty desirable right now, I would think, based on, people's limited mobility or just access to certain things. And
yeah, definitely.
Yeah. If you were starting today, you're not that far, but you've learned a lot of lessons. What's a big lesson that you've learned just with respect to development and coming to a new city?
A big lesson I've learned, I think it really, your team definitely defines you and who you work with. Very important, and I've learned a lot of lessons about that, as well as, I feel as though I have a very strong grasp on construction and development, but it's running an organization and hiring 10 people in a short time frame has been a learning experience for me, for sure. I didn't have a lot of formal training when I started. I came in through the construction way. So managing a private equity fund, raising all the capital I have, I didn't, have an MBA or anything. So I just kind of had to learn that by experience and talking to a lot of investors and a lot of people and, learning the best way to structure deals, I'd say. And now we have a great working framework, but there was definitely there was a big I don't know if there's a huge learning curve. It's been going very well, but definitely, taking on a lot. We started a property management division when we started opening the projects because we wanted to manage them. So it's been a lot of high growth in a short amount of time. So I guess we just kind of adapt quickly.
Well, that's great. Hey, Meg, if we could, I'd like to shift gears here for a second. By day, I'm an insurance broker, And I work with my clients to assess risk and determine what to do with the risk. And there's three strategies we consider. The first we look to see is, can we avoid the risk? If we can avoid the risk, then there's no more risk. If we can't avoid it, then we look to see, okay, can we minimize the risk? And if we're not able to avoid or minimize the risk, then we look to see if we can transfer the risk. And that's what an insurance policy is. And I like to ask my guests if they can identify what they consider to be the biggest risk. And this is looking at your clients, the market, your business. I'll let you frame it however you want. But just for the clarity, I'm not looking for an insurance answer. And with that, if you're willing, I'd like to ask you, Meg Epstein, what is the biggest risk?
I think in Nashville, I think being only centered on one market, I think I need to closely monitor supply. And it is always unnerving when I drive downtown and I see 15 tower cranes in the air, right? Because we have been able to absorb that supply, but I think it's a metric we need to watch very closely, especially with the pandemic and how quickly the market's changing in ways we haven't seen. So I think supply is always going to be a fundamental risk for me, and in which case, I need to change strategies, and hopefully we're nimble enough to.
No, that's supply and demand is kind of the equation there, right? With real estate.
Yeah, I mean, it's a simple answer, but sometimes it's really just as simple as that. It's just making sure that you're monitoring it closely enough before you go start a project, because especially with the time frame of real estate, it can take 2 to 3 years to stabilize something, and by the time you get it entitled. So it's important to look at that market data. And I don't think a lot of people do, surprisingly. You'd be surprised. You'd be shocked.
Yeah, no, the data doesn't lie, right? The few books I've read recently just talking about how the bias we all bring to the situation, and the data is usually telling you the story there, but depending on what your past is, if you're shading that data in any way, you may not see it for what it is. So
Right.
Definitely want to pay attention to the data. That's good. Meg, where can the listeners go if they would like to connect or learn more?
Definitely our website, casouthdevelopment.com, and there's some contact information for there. You can get a hold of my assistant or LinkedIn, and we're pretty, we try to make sure to check messages and whatnot and post updates there.
All right. Well, Meg, I can't say thanks enough for taking the time to talk. I've enjoyed our talk, learned a lot, and I hope we can do it again soon.
Great. Thanks so much for having me. Have a good day.
All right. For our listeners, if you like this episode, don't forget to like, share, and subscribe. Remember, the more you know, the more you grow. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Network's CREPN Radio.